The following is a presentation of TFNN. Live at TFNN, the Money Masters. And now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. I am half of the... we just lost the microphone here. That doesn't help. Give me a second. A snafu. Okay, we're back. Sorry about that, folks. Hey, that was pretty good correction there. Anyways, I'm half of the Money Masters. Tom is probably just getting... Oh, no, he's still in the air. He's flying up. He's got an appointment up in the north today. Hope it's nice and warm up there for him. And he'll be back tomorrow morning for sure. But thanks for joining me right now. You've got the Dow off 230. You got the S&Ps off 25. Composite down 56. Small caps down 16. NDX down 52 points, 2.3%. The NDX, which had led the market up, is leading the market down. And we'll go take a look at that. You can always give me a call at 877-927-6648. Now, if you happen to catch the first hour, I kick things off for us at TFNN at 9 a.m. And, a little departure from what I might normally do. It's Thanksgiving week, and I'm absolutely grateful for your presence here today, and just grateful for so many things in my life. In fact, one of the things I really want you to be able to do this week, right now, this moment, you should be able to, at any point in time, the snap of a finger, be able to have the 5 things that you are most grateful for in your life. Now, many of you out there have got more than that, and if you're sitting here listening, whether you're at your office, whether you're at your desk, wherever it is in life, folks, if you want to be able to have the right frame of mind, and you do, because when you need to make decisions, when you need to have strength, you need to, the thing that's most important is to be able to come from a position of strength. You never want to act from fear. And when we take a look at these markets, there's always fear and greed that are going on. We're able to show you where those fear and greed points are. I can teach how to trade. I can teach how to invest. If you're not satisfied with your trading skills right now, you're looking for some education, you're looking for some coaching, then go over to the homepage of TFNN and click on my name. You'll see my newsletter service. You can try it for free for 30 days. All you're doing, you're putting down a credit card, $149. It's going to give you access to a webinar, 2 webinars actually, but one that you absolutely must have, which is whole money management. You've got use of the trading tool that is critical. The most important aspect of your trading, folks, it is not where you enter, and it is not where you exit. The thing that will have the most impact on your trading is your position size. And the reason why I say that is because step number 1 to understand your position size is understanding your risk. How much of your trading capital are you going to put at risk on any one trade? It needs to be no more than 1%. The second element is, what is your stop going to be? Before you get into any trade, if you want to play this money game, just like any other game in life, there are rules that you have to play by. In this game, you really have to play by the rules, and you need to know what your per-share stop is when you're going to enter a trade. You then can take your risk. Let's say it was $1,000. Let's say that your per-share stop is $2. Your position size would be $500. But even more important than that, folks, you want to understand what the average daily noise in the marketplace is, and that's what the position size calculator is that I created. Go check it out. Do yourself a favor no matter what level of trading you're at, because this, folks, will make you all kinds of money, and it'll save and help you protect your capital, and that's really what it's all about. Now, because it's Thanksgiving, because I'm just simply so grateful to have the privilege to be able to be here with you and share with you what I'm doing, a little departure. I typically do not share during the radio shows, and we talk about stuff, do not share exactly what's in my newsletters on a day-to-day basis. Almost never. But what a little departure here. I'm hoping that all my subscribers are going to say it's okay. It's just part of being grateful. It's part of giving back. And I mostly want to be able to do that because you want to understand the type of market that you're in. You want to understand what's the normal direction. And if you trade a daily chart, then what you want to be able to do, folks, is you need to be able to step up to the weekly and or the monthly chart to have a better idea of the direction of the market and where things are going. Because when you do that, folks, it gives you a better perspective. Because on a daily chart, that's noise. That's what the weekly chart is saying to the daily chart. That's just noise. The monthly chart is saying to the weekly chart, you're just nothing but noise. And on a 30-minute chart, well, it's a 60-minute that says, you know, down below, you're nothing but noise, this volatility that's going in there. You don't want to glue yourself to a screen when you're trading. In fact, you want to be like one of our callers that was just simply calling in to check and see, you know, where should he put his stop, because he wanted to go out and be with his kids. Now that, folks, that is living. That is the way to do it. Now, what I've got up on my screen here is the monthly chart of the New York Stock Exchange, the NYA. And you really want to be able to understand. Oftentimes, we overlook this index. But it's probably one of the more important indexes because you've got most of the trading stocks that are out there, and it's going to give you a better idea of the real breadth of the marketplace. Right now, the New York Stock Exchange is down 160 points. The Dow's down 218. The S&P is down 23. And what you'll see here, and hopefully you're watching us on Tiger TV. If not, go to the homepage at tfnn.com, click right now on Tiger TV, and watch this show so you can see the charts. Or if you're listening to an archive on a download from iTunes, and we have so many ways that we're able to share our knowledge with you and educate you. But if you're listening on a mobile device, go when you do get home, when you get in front of a computer, go check out the archive of this show. It's on channel 15, because this is a chart you absolutely want to understand. And it's part of my newsletters. You know, maybe it's another reason to sign up so you can get it, you can print it out and just have it, and you can maybe go ahead and line up your chart like this as well. But what I've got here, what this is really showing, this is showing the different channels that have existed in the NYSE, going all the way back here, folks. This channel here is going back into the 2002 time frame. It actually goes back a little bit further, but from the 2002 time frame, when you take a look at that channel, oftentimes you're trading with inside that. You can see that, right? Until we made our market highs back in the 2007, the October 2007 time frame. And then what happens? We make this next down channel, right? And you can see that. You can see how we made that down channel coming into the March lows, the February area. And then what do? We have this nice move up, this nice bounce up. Now, the bounce up, and you often hear me talk about, or you always hear me talk about, the 0.382, the 0.618, the 0.786 retracement, they're nothing but normal breathing patterns in a marketplace. The NYSE almost got to the 0.786 retracement all the way off of its lows from the March 09 time frame when you go and take a look at it compared to the October 2007 highs. That normally is just setting up nothing more than an ABC down. And any chart that we might call up on the screen that we take a look at, we'd say that's an ABC down, assuming that the volume was set up properly. Now, what we've done since the May highs out here, folks, and the May high, the May 20th high, May 2nd high, I believe that it was the high in the marketplace, and that was in the NYSE. That was up around the 87.18 area. Since then, what you can see is we have now started a new down channel. And until we break out of this channel, just as you can see from 2000 up, from 2007 down, from 2009 up, until we break through that channel, and we're trading inside that channel, folks, we are clearly, this is signaling to us, clear. This is not my opinion. This is just simply what the charts are communicating to us, that we are in that next leg of that bear market. You know, I have been out there sounding the horn like Paul Revere, and if I was wrong, if I'm wrong, I'm wrong. The sound that I've been playing, folks, is for all of you, 70% of you out there have got most of your nest egg in a 401k, that the only way for you to control that, you can't play the short side in many cases, but what you can do and how you play the short side is you go to cash. The NYSE along the way has given us plenty of signals that look out below, and I want you to look out below. I want you to protect what it is that you have. I don't want you to go from anywhere near the highs in 2007 all the way down to the March lows. This thing could go lower, and I'm not here to prognosticate, bad news or what have you. The reality is, if you go back and you take a look over the last several hundred years, you'll see that 63% of the time we're in some type of recession, some type of down move. It's nothing more than a breathing pattern of the marketplace. That's what's going on here. Now, when you really take a look at this chart, what's even more important, if you are a person that believes that there is something out there in the universe that is more powerful, more stronger than anything that we absolutely understand, well, then we can go back and we can take a look at an ephemeris, and we can take a look at either lunar aspects or we can take a look at planetary aspects. In this case here, what I've got up here is planetary aspects and configurations. And what happened here in the August time frame, so we put in the low in August, I believe it was August 17th, and during that 7-day period of August 13th, this actually occurred over about 4 days, from August 13th to the 17th, we had a series of planetary conjunctions and oppositions that normally, in fact, over the last 200 years, have always marked a market low. Those have never been broken. When that was broken, folks, and that was actually truly broken the month of June of 2008. But that was a signal that there was trouble in River City and that we were now entering a bear market phase. That was just simply the confirmation. We can go back and argue about when, how long we've been in a bear market. But if you take a look at these channels on the NYSE, what this is telling you, folks, this is telling you that at that stage we were in a bear market phase. Now, that there had 6 different aspects of conjunctions or oppositions. When you take a look at what actually occurred in the month of February of 2011, and then the following month in March, and these I'd have to move these over, but when I widen and shorten my screen. But if you go take a look at the highs that were put in during that time frame, we had a series in February over a 7-day period of time. You had 2, 4, 6, 8. 8 actual conjunctions that took place. Folks, that is an anomaly. That is unusual. And what that did was that set up a range, in essence, of the highs. You came back and you confirmed that, if you will, in March. Yes, did the market go up above that a little bit? It absolutely did. But we're trading down below that now. And actually, if you take a look at the March one, I'm taking a look at back-to-back, and you take a look at the low there, the low was 78.73. And what's so interesting about that series, folks, is that when you take a look at the October 27th high, the October 27th high came in at 78.64. And as I said, the low that we had there was 78.73 in March, folks. Until those highs are taken out, in order to take out those highs, we're going to have to bust through. Market has to bust through this channel line. So we are in nothing more than the next down channel line, if you will, the down channel of a bear market. And will there be up days where you're going to be up 200-300 points and then next day maybe down 400 points? Absolutely. That's volatility. You want to understand how to trade this, and to the extent that you can go short the market, you do. And if you can't, you go to cash and you come back in when we have some of these other bounces. So this, and if you take a look here, folks, we take a look at, and what is really important here as well is on the month of October, this historic run that we had. What you also had here, you had this bullish engulfing candle. Now, what's going to be important, and when the low of that is taken out on a monthly basis, and the low here on the NYSE is 64.14, when and if that low gets taken out, because that should act as a support area, and that support area, folks, was running into where we had really 2 very powerful back-to-back P-index dates. You had it August 25th and 26th of 2010. We then had QE2 that came out. How did these P-index dates know that we were going to have another liquidity event that had this nice run-up from August of 2010 to the May 2nd, 2011 timeframe? But you also had another back-to-back of 14 and a 2 P-index date on September in 2009, folks. And you can see that those acted as very strong support areas as well. In fact, that's where the market had pulled back down to in October and rejected it. So when that area gets broken, and if it gets broken, you better be out of the market if you can't go short. 877-927-6648. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Directions Alternative Strategy Funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds. I'm with X. To learn more about Directions Alternative Strategy Funds, please visit TFNN.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC.
Hi, folks. Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you, folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. I am Steve Rhodes, co-host of the Money Masters. Tom is out of town today and looks forward to getting back here tomorrow to join me. And right now you got the Dow off 227, S&P's off 23, composite down 52. We haven't even looked at Apple yet, but you got the NDX down 50 points. And let's go to Rick all the way up in British Columbia, my co-host today. Rick, how you doing this morning?
Hey, pretty good, thanks. How you doing?
I'm doing great, doing great.
Hey, I got one stock that I think looks really bullish, at least for a trade. That doesn't mean it has, can't go a little lower first. But first, I'd like to talk about the Bradley model. You follow that a little bit?
I do punch it up on my screen, every now and then, but I really don't trade off of it.
Okay, well,
if you will. I'd rather take a look at either the patterns that are going on, or maybe some, more of the astro and lunar phases than.
Well, actually, I think that's what they do. See?
Yeah, no, I know.
And anyway, they have a turn.
Yes.
Which kind of makes sense to me. And this is not a major date.
Yeah.
The major date they have for this year is on December 28th, but they have one, and they have 2 dates listed. They normally just and that's Tuesday, Wednesday.
Okay. And you're thinking that that's a turn date, so you'd have a low going into that time frame?
Yeah, that's what I think.
Yeah, okay.
So I just thought I'd mention that.
Yeah, absolutely. Thank you. Thanks for sharing that with everybody.
And here's a stock that almost parallels that potential.
Oh,
is JDSU.
Okay. Now you're taking JDSU. This is really it's a great stock out here. And if you're watching us on Tiger TV, and I missed this trade, but it did set up a nice butterfly pattern right on the October 4th time frame. You had that nice 1.272 expansion. Now, folks, when you trade the butterflies and Gertleys, what you want to understand is you want to understand what their normal behavior is, if you will. And so if you just simply go from the high to the low on this here, what you'll see is first you'll get a bounce to the 0.382 area. And then folks will take profits. Folks will get off the elevator. They'll get on the elevator. And then typically you come into the 618 area. Now, when you're coming into any of those areas, you want to take a look at the wide range, if there's what the bars look like, if they're wide-ranging bars or not. And in the case of JDSU, on October the 27th, you had a nice wide-ranging bar come into the 0.618 area. It closed below that, which was at 1191, but it was still a nice wide-range bar. You had a gap up, so even on my screen, it doesn't even show the total width, if you will, of that bar. So the strength that you had with a wide-range bar and a gap up and some volume, that was signaling to you that you would go to the next area, which is the 786. So on JDSU, that would be 1279. And what does JDSU do? It gets to a high at 1276. Rick, isn't this amazing?
This stock is actually, from a technical point of view.
Yeah.
It look like even now it looks like it should test that 10 down there, and I was actually owning it that day, and it tanked down to 10 because they had a little problem in Japan with producing something.
Right.
But that went out of the market, and we have some. Like all I'm saying is even. It's got 11 written all over it, and I bought it this morning.
Did you? Okay, good for you.
But I think there's a very good chance that it can go to 10. And if it goes down there tomorrow, we could be going into this little Bradley model P date. And the reason I mention the Bradley model is a lot of the cycle dates, they must kind of correlate somewhat with some of the dates that you find, right?
Oh, they do. No, absolutely. Yeah. No, they do. And, I have my subscribers have a list. It was in last Sunday's newsletter. They have a list of really all of the key dates in 2012. So they already know what those dates are.
I know they do. Yeah, you're exactly right.
And the cool thing is that, we've got information, tools available to us, just like, you're looking at the Bradley model, where in advance you know what to be aware of. From a trading standpoint. And, on JDSU right now you've got, an average noise factor of about 50 cents. So, if you're in right now, depending on where your stop is, it's probably got to be, somewhere in the 970 area, something like that.
Yeah, well, you know what? It shouldn't really not break 10, I don't think.
Yeah.
It's got a short interest of 6%, which is enough to give it a little boost, nothing major.
Yeah.
But just volumes alone, Friday we broke the previous day on about 30% lighter volume.
Right.
Today we're coming down, and like I say, that $10, I think it's 10.05. I really don't know the exact number.
Yeah.
But that little,
And on October 20th, so you've got a little swing point that's sitting out there. It's got 5.4 million shares, and right now you are trading inside of that area. And so, and you've already had 1.2 million shares. So, you're starting to come into that. I don't know how much of the volume was in the first 15 minutes of trading today. But you're starting to come into that with a little bit too much volume, with it only being 10:29 an hour into trading. But, you want to watch that area. Hey, Rick, thanks so much for calling, as always, and have a great Thanksgiving if you're sharing it with us folks down here in the States.
Oh, yeah.
Okay, great. And, folks, we'll be right back with Frank from Nashua.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com. Under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your gold report with a free 30-day trial subscription, log on to TFNN.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Thanks so much for joining us. Right now, you get the Dow's down 246, S&P's down 25, Composite down 56, and the NDX down 53 points, 2.4%. Let's go to Frank in Nashua. Frank, thanks so much for calling. How you doing out there?
Hi, Steve. Okay. Unfortunately, I was a customer of MF Global.
Oh.
Yeah.
Are you okay? Or just waiting to?
Waiting to see if I get something back.
Yeah. That is a bad deal. That is a bad news deal. I'm sorry to hear that. Sorry to hear that, Frank.
Thank you. Yeah. I was also looking at the Bradley turn date and close to the new moon.
Okay. It's coming this Friday.
Yeah, I'm thinking about the Santa Claus rally fundamentally.
Yeah. At this stage here, if we just simply take a look at the NQ, right now you're trading out at 2201. I've got the continuous contract on my screen here. And this was also another real beauty with regard to the way that these butterflies work and Gartley's. And we were talking about, when we were with Rick, talking about JDSU. And I think this is also where Rick is coming from. If I went back to that chart, we'd probably see this pattern, unfolding as far as what he's looking into his trade. But, as we came into that 0.786 area, I'd have to go back and take a look at the bars just to see, if they were wide-ranging coming into there. So what I'm going to first do here, let me just erase some of this on the screen here to make it a little bit easier for folks to follow along. If I can find it, there we go. Let me erase that one right there, which is the Fibonacci level. And so folks, what you want to take a look at from a retracement standpoint, Frank, you don't mind if I just take a minute here, do you?
No.
Okay, great. So what you want to take a look at on this butterfly pattern that was set up here is, so we talked about the retracement areas, and this is coming back off the October 4th lows, and you can see how when you came into that 0.786 area, you came through it smashing, you came through the 0.618, you came through the 0.786, a nice wide range bar. And folks, what that's doing, that's communicating to us that what really wants to happen here is that this Gartley buy pattern was really turning out to be a new A to B equals CD up. And that A to B equals CD up would take you into the 2396 area. And what does the NQ get up to? It got up to a high on October 27th of 2480. And that's why you want to take a look at these patterns. You want to take a look at the bars as you're coming into those retracement areas, because they communicate so beautifully to us. It's like some form of artwork. Now, when you do an A to B equals C to D, the move is normally over. And also, oftentimes, now this was just a Gartley, so it was a Gartley, wasn't a butterfly. I apologize if I think that's what I was saying. So when you're taking a look at these, these Gartley patterns, that to me is the final move when you have a Gartley that blows through that 0.786 area, and then even though it's going to first stop and do a move, what it's also really communicating to me is going to finish that off. Now, when you take a look at the A to B equals C to D, the angle of where it actually finished, where the price actually finished, was well inside the October 27th area. So it could have gone on a little bit more, but moved sideways, and it moved sideways because of the strength of that, in my opinion, because of that 17 planetary index date. You talk about the Bradley model like Rick did, Frank, and so that high out there is very important. Now, this thing is making a move down. You're trading near its session lows. You're trading at 2200 right now. You gap down. And do I have the daily chart up? I got the daily chart up here. And now what it's doing, it's making a retracement on the way down. And that retracement on the way down, folks, so the area that you're going to want to take a look at is likely going to be that October 4th area. But right now what you can see, it's trading not all the way to the 0.618. So it's going to be that 2178. What you would love to be able to see, Frank, if you were going to play that Santa Claus rally coming into this new moon on Friday, at least for me, I'd love to see it get down to that 0.786 area, or 2115. And really what you'd want to do is you'd want to see it close above October 4th, so close above 2126. And if you can do that on lighter volume, then to me, I think you've got a real nice trade set up. All righty?
Great. Thanks, Steve.
You bet. Thanks for calling, and best of luck to you. And sorry to hear about the MF Global. Folks, we'll be right back. We'll go to Don in Odessa and Ken in Iowa. You two can get in on the action. Give us a call.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave and very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, you visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we waited at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. And thanks so much for joining me today. Tom is off the better half of the Money Masters, and he will be back eagerly tomorrow. And you know what I got up on my screen? Hopefully you're watching us on Tiger TV. This is a tribute to Tom. This is King Dollar. We haven't talked about King Dollar, but got the dollar trading up 33 ticks, and hopefully between this segment and the next segment, we'll go take a look at the dollar index, see what's going on out there, because you want to be able to understand the correlations going on between the dollar index and the U.S. market. But before we do that, let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I would just want to let you know that I sure do appreciate what you've done for me over the past couple months here.
Thank you very, very much. I am glad to hear it. I'm grateful to be able to, to have the opportunity to do that, and love to hear from you. And thanks for introducing yourself live on TV.
Well, I'm not watching the TV, but I've got some charts up here.
Okay, cool.
When I thought I knew more than you, I got TZA, and I'm just about to break even on it right now.
Okay.
Do you think, or how far do you think that thing's going to go up? That's what I want to know.
Sure. Okay, so we're looking at, and folks, what I've got up on my screen here is the IWM first. So I'm going to do the quick correlation on the IWM, what you're looking for there. So this morning, we've had a nice gap down if you're taking a look at the IWM, and it was going after the November 1st swing point that had 110 million shares. Now, the low on that swing point is 70.96. So what you want to absolutely see today is a close below 70.96, okay?
Got it.
So that's the first thing you want to be looking for. Now, you'd love to see it close below 70.96 and more than 110 million shares. That would be the good news. If we take a look at the bad news, if you will, you've only done 15 million shares here in the first hour and 15 minutes. So some volume will have to come into the marketplace, and there's plenty of time for that to occur. But there's right now it doesn't have the volume behind this push. Of course, we've been saying that on the way up and on the way down. So, but first you want to watch that swing point. Now, the other area that you want to watch closely is the October 24th swing point. And what you have there is you've got 90 million shares, and the high there is 69.73. So one possible way that this thing might trade today might trade into the 69.73 area. If you close below that, you'd like to see it close in there on more than 90 million shares. But if it closes into that area, what that's saying is that it would likely want to go test the bottom, which would be the 67.75. That's where you would have a real, so I'm giving you a couple of different points where you'd get a release of information. Okay?
Yeah, it helps a lot.
So that you can kind of track this to determine, how to stay in the trade and so forth. And right now, what makes sense is you're coming up against a resistance area, a real resistance area, just simply from a Fibonacci expansion and contraction area. You know, your next area of support on this is going to be at the 89, looks like 89.69, which is, again, it's amazing. That's the 1.272 expansion of swing points here from the November 1st all the way up to the high on November 8th. And then what's interesting about that is that takes you right into that swing point from October 20th that we're talking about. So I would expect the way that the market is trading, that's what you're going to see next is really the test of that area. If you can stay, if it closes inside that, your next piece of information comes at 67.75, and then after that, if we just simply take a look at where are we at from the October 4th area all the way up to the highs that we had October 27th, you're trading below the 0.382 area, and 66.54 on the IWM would be the 0.618. That would be just a normal retracement, and that might be all that you get out of it during this time period. Because the market's going to breathe up and down. Sure. If you were holding this for a much longer term, I would say hold the single or what have you from that trade. Now, what we're going to do here real quickly is pull up the TZA. And so that you can try to correlate that to the TZA, and we see what's going on there. In the TZA, what you want to see today is you want to see it close above the 34.30 area. You're trading inside that swing point right now. You're trading at 34.10. That swing's got 47 million shares. And on the TZA today, so far in the first hour in change of trading, you got 8.6 million shares. So that's not too bad. The TZA is suggesting that to me that it's got enough volume to get up over that swing point. If you get up over there, your next area of resistance here is going to be October 20th, and that's going to be in the $38.13 to $41 price range, which would be nice because that would put some cash in your pocket.
Good deal.
Yeah. So watch those areas, okay, Don?
Thank you so much, Steve.
You bet. Thanks for the call, and nice to meet you on the phone. Let's go to Ken in Iowa. Ken, how are you doing this morning?
Good morning, Steve. I'm doing great. Hope you are.
I am. Good to hear your voice, as always.
Yes, thank you.
What are you trading today?
I'd like you to take a look at XLU. It's Spider's Utilities.
Yeah, absolutely. And are you in the XLU looking to get in? What's your take on it?
Looking for an entry point.
Looking for an entry. So you're in the XLU, and what it's doing right now this morning. And, folks, this has been a nice little setup here. Whether this has been a defensive play or not, this thing has hung out, near its highs back in the October 27th area. Made a high there of 35.47 with 13 million shares. Now, it came off of its high on that November 1st with slightly under 13 million shares. So not a lot of damage was done, on that part of the downdraft with the XLU. And right now what you're doing, Ken, is you're trading inside the swing point of November 1st. The low there, 34.05, high of 34.60. You're trading at 34.10. Now, that swing point has 12 million shares. We mentioned that earlier. And what you've done so far is you've done 1.6 million shares. So this doesn't seem like it's got the volume, okay, to bust through that area. But if you do close below 34.05, even if it's on lighter volume, this will likely want to seek out the next swing point, which is going to be down on the October 14th time frame, and that you're looking at a range of 33.70 all the way up to 33.99. Now, what you should see if you're watching this on Tiger TV, folks, and I've got a tool in the Ensign Chart software that I used, and it's a great tool. It's named the Pesavento Patterns tool, if you will, and what it does is it measures the mathematical geometry that's going on between swing points, either expansions or contractions. And what you can see here, Ken, on the XLU is right now you're at a 0.618 retracement going back to the swing point from October the 14th. You're at a 0.382 retracement going back from the area of October the 4th, that important swing point. If that area doesn't hold, because you're also making a move of a move, if that area doesn't hold, this wants lower price, because this should be an area where the line has been drawn to the sand on the XLU. I hope that helps you.
Okay, thanks.
Okay.
If you have time, take a look at MOS, will you?
What is it? MOS, Mosaic?
Yeah.
You got it. Okay, thanks a lot, Ken. We'll be right back, folks.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before December 31st from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, the Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman, editor of the Chapman Market Line and Trends Watch, as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, up next on TFNN.
Welcome back, folks. 877-927-6648. And absolutely you want to stay tuned. We've got the franchise out for you. We've got Basil Chapman in the on-deck circle, then Larry Pesavento from 12 to 1, then coming back from 3 to 4, you got David White. Ken Shreve's going to fill in for Tom from the 4 to 5 hour. I'll then go ahead and take us home from 5 to 6. So you got everybody out here. You know, on a day like today, you want that. And you know what's really great about each of us as contributors, we use different systems. We look at things a little bit differently, if you will. And it's all independent. You know, all of our thinking is really independent. And that's really what, you know, my outcome for all of my clients, all of my subscribers, is really to be able to teach them. My newsletter service is really all about education. It's not about just take this trade and that. It's about understanding the tools that are out there. I want you to overcome your fear, your false evidence appearing real. I want you to be able to understand how the market breathes, where these different sacred geometry patterns come into play, so that you too can totally, what I really want to do is teach you the money game, because that's what it's all about. It's about taking your capital and making it grow so that it can pay for all your monthly expenses, because when you attain that, folks, when you've defined financial freedom, and in my opinion, that's how you should define financial freedom, you talk about unleashing the power within yourself. There is nothing like it. Now, all kinds of tools that are out there. You know what? I've got my King Dollar hat on, if you will. You know, and that's a tribute to Tom being able to pick out, that the dollar is on its way up. And what I want to be able to show you is the correlation, inside the marketplace, if you will. And the correlation here right now that you've got as the dollar gets stronger, the market gets weaker. And the red line that I've got up on my screen, it's why you want to watch Tiger TV, is the inverse of the dollar index. That way, what this is showing is as the line is moving down, that shows the red line is moving down, that shows that the dollar is getting stronger. That way it's more easily the correlation is easier to view and envision on my screen. And don't worry about whether the line is below or above. That uses two different scales, so that doesn't really have any impact. The impact that you want to understand is, in essence, tick for tick, the correlation between the two. Why do you want to understand that? Because when you're trying to put together the markets and understand where markets are going, you want to put together some pieces of the puzzle. It's not one of those puzzles, quite frankly, folks, that you put together and you can't figure out which piece to put together. There's maybe 4 or 5 pieces are all you need to get a feel for where the market is going. And with regard to trading, not all your trades are going to work out. You're going to get, losses. That's just nothing more than I call it just leaves or money falling off of our money tree. But what we want to do is we want to be able to have more winning trades. We want to be able to teach you about the money management piece of it, because we can grow your money tree. And if you don't have a copy of a money tree, if you don't have a money tree, send me an email, steve@tfnn.com. I will send you that money tree. So you can see the correlation that exists here. And it isn't always correlating, but you can see this is pretty darn good correlation between the dollar. In this case here, I've got the SPYs up. Now, what's one of those pieces? I believe when we started off this show, we were taking a look at the Dow. So I'm going to switch over to the Dow here real quickly. And on the Dow chart, what I was talking about was the strong area that should have been support, which were these bearish engulfings, because these acted as support and resistance. They're still valid. They're still important. And you can see today, right now, how we've come crushing through that. We're at the 11,512 area. You're doing that with a wide range bar. You're below the 0.382. And what this is signaling to us, this is signaling that it wants to at least get down to 11,122. Would there be anything wrong with the Dow chart? Absolutely not. It's only a 0.618 retracement. It's simply a normal breathing pattern. What else do we have out there? If we go take a look at the dollar index, in order, if you're going to play a Santa Claus rally, what you want to be able to do is, just as opposed to believing in Santa Claus, if you will, you want to go and take a look at the dollar index, King Dollar, right? We go take a look at King Dollar here real fast, folks, and maybe Baz will follow up on this as well. You can see this up channel line that this is in, and until it busts through that, until you have a weak dollar, as long as that correlation exists out there, be careful being long right now. Folks, thanks for joining me. Stay tuned for Basil Chapman. I'll see you at 9 a.m. tomorrow, or 5 o'clock tonight. Join me, please.